It's time for Wise Money with Korhorn Financial Group with certified financial planners Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of the Wise Money Show with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being here, friends. My name is Mike Bernard. I'm your host. I'm also one of the certified financial planners on the program. And with me in the KFG studios right next to me, my business partner and fellow CFP, Josh Gregory.
Hey, it's open enrollment season, and if you or a loved one are either in retirement or you're approaching retirement, you need to understand the changes that you can make to your health insurance this time of year. You also need to be aware of some changes to the laws that could impact your protection planning moving forward. To help us unpack all that, we have special guest Ben Bulgrien in the studio with us today to help you understand exactly what your planning opportunities are. That and more on today's episode.
That's right. Medicare open enrollment and health insurance expert, Medicare expert, Ben Bulgrien, back in the program to share some wisdom with you. If you have a question for the program, need any help, or need some review of your approach to Medicare, we are here to help. Call or text us 574-222-2000. That's 574-222-2000. Online, wisemoneyshow.com is where you can find us. Reach out to us there as well. And then all over social media, wherever you're at, we are there as well. Search The Wise Money Show. Medicare, you want it to be easy. I do. Like at this season of life, you just want it to make sense. You know, you're kind of stretching your wings and transitioning into the golden years, and all of a sudden there's this big change that happens with Medicare. So listen, we're going to equip you right now. If you are on Medicare or are about to transition, this show is going to help you with some of the changes and some of the decisions you need to make. But the other thing is, if still retirement is a long way off, and you say, I'm not worried about Medicare right now. No. You need to start the education process. We're going to share a few stories as well that are kind of pointed directly at you. But this show is going to help you get prepared and plan ahead for Medicare. So, Ben, we're going to get into a lot of different areas today. We're going to explain what Medicare open enrollment is, what the decisions are that you need to make. And we're also going to explain the changes coming to Medicare next year and the following, a lot of things. But let's start at the foundation, right? Because it is confusing. Right. When you say the word Medicare, there's actually a few different meanings for it. You have a big choice when you transition onto Medicare, whether that's at age 65 or when you retire, typically whichever is later, but that's not exactly true. You've got this big choice between traditional Medicare or original Medicare or Medicare Advantage. Let's start by explaining traditional Medicare. What is that?
Yeah, absolutely. And Mike, I will say, I think you might be alone in wanting this to be a simple conversation. My clients always tell me, Ben, I want this to be as complicated as possible and take as long as possible. So I'll do the same.
Okay. Do you oblige them?
I do. Oh, yeah, it is hours and hours. So yeah, with original Medicare, and actually for both of those decisions, we've got original Medicare with a Medicare supplement or a Medicare Advantage plan. You're going to need to have both Medicare Part A and Medicare Part B. Foundational for both of them.
Okay.
Part A is going to be cost associated with hospitalization, and B is your medical coverage or doctor. So we can think about A as inpatient, B as outpatient.
Okay.
So regardless of what we're doing, that's the starting point. Again, either turning 65 or coming off of group coverage a little bit later.
And Part A typically is not at an extra out-of-pocket expense normally, and circumstances can change, but most people don't pay extra for Part A.
Right, correct.
Okay.
And then Part B is going to be related to your income. And to make it easy on us, it's based on your income from 2 years ago. So your income in 2022 actually would determine what you're paying right now in 2024, and then 2023 will determine what you pay in 2025.
Yeah.
And there's a sliding scale of how much you would pay based on what your income was as a tax household.
And here's where I'm going to just jump in with a quick story. I was meeting with someone who is 80, turning 80 this year, and she had a lot of investments that she never, during her career, never put into tax sheltered accounts. She could have maxed out her 403B. She could have maxed out her Roth, but she wasn't. She wasn't accustomed to doing that before she started working with us. Well, now in her 80s, those investments were kicking out a lot of capital gains. She had no control over. She wasn't even, we're not selling these investments because if we did, there'd be huge capital gains. They're kicking off capital gain distributions, and it's causing her to pay more for her Medicare. So I'm telling you, even if you're in your 40s listening to this saying, I don't really care about Medicare, you need to be planning for this because you're setting yourself up for what you could be paying in Medicare out there in the future.
That's exactly right. And this is one of those places that we often highlight that your protection planning, your Medicare planning needs to be married together with your tax planning or your income planning for that very reason. And the mechanism that causes this, you said that your income is what determines what you pay for this Part B coverage. And it's a rule that's called IRMAA, IRMAA. That's the acronym. I always think of the little old lady that I knew named Irma.
Yeah.
And this Irma is not a sweet little old lady who's always blessing you and everything. This is there to cause the price tag that you pay for your health insurance to go up if your income gets too high, essentially.
Yep.
So, this is one of those things that you need to be watching. And to your point, Mike, it may be that your income is adjusting not within your control, not on your radar. It may be something that you don't even see coming. And that's exactly why you need to be out in front of this, be proactive with your income planning so that you know where those Medicare Part B premiums are going to be potentially, 2 years from now.
Yeah, absolutely. And we've already talked about Part A, we've talked about Part B. I'm going to skip the supplement for just a second. We'll talk about Part D, and we'll get to Part C in the next section.
All right.
So Part D is the easy one. It's your drug coverage. D for drugs.
Yeah.
Only letter that makes sense in the whole thing. I'm jumping to this one because this is also related to your income. It's a smaller adjustment, but it's that IRMAA adjustment still applies. So with our setup of Medicare supplement, we're going to want a drug plan based on the prescriptions that you're currently taking. And then a Medicare supplement is a recommendation from us because there are some gaps in Part A and Part B coverage.
And what are some of the typical gaps?
So I'll mention a big one for A and a big one for B. For Part A, there's a roughly $1,600 deductible.
Okay.
And that's per benefit period, which is every 60 days.
Oh, my goodness.
So if you're really unlucky, you could get that a couple times in a
Oh, my
year.
goodness. So,
Right.
again, the complexity here. Why not? If you're going to call it a deductible, everyone understands deductibles calendar year.
Absolutely. Yep.
Not for Medicare.
Not for Medicare.
Change the rules. Okay.
The big one for Part B is it has 80-20 coinsurance. So Medicare would pay 80% of the bill. You'd be responsible for 20%, which is not a big deal if the bill is $100 because then you're on 20. But there's no limit to that. So now if the bill is $100,000, you're on the hook for $20,000.
Wow.
So to address some of those gaps, we would recommend a Medicare supplement policy, which are also called Medigap policies. They're identical. And there are 10 of those. And that's too many. And they've got letters attached to them. There's a Part A, and then there's a Plan A, and a Part B, and a Plan B. And so we try to make this complicated situation as simple as possible. And primarily we talk about Medicare Supplement Plan G.
Okay.
And we talk about G because it covers all of those gaps in original Medicare except for one. And the one that it doesn't cover is a Part B deductible. And this one makes a little sense because it's an annual deductible.
Yeah.
And for this year, it's $240. So pretty minor.
Pretty reasonable, yeah.
Yeah.
Okay, so traditional Medicare, the ingredients, A, B, D, and a supplement. And typically that supplement is Plan G.
Typically, yeah.
And you don't have to get a supplement, but you'd almost be crazy not to, right? Because that A, B, and D government-provided coverage has all kinds of holes in it. There are limits on what they'll pay, and it leaves a lot of risk on your shoulders, essentially. And that's why these Medigap or Medicare supplement policies were created, to fill in the holes and make sure that you've got a little bit more comprehensive protection in place.
Yes.
Right?
Yep, absolutely.
Okay.
All right, so I didn't leave you a ton of time here in this segment before the break, but now contrast that with the other choice, Medicare Advantage.
The Medicare Advantage is also known as Part C, so that's where that letter comes in. And they're also referred to as Medicare replacement policies. So this is why it's important that we have both Part A and Part B, because you have to get the same type of coverage, but now it's administered by a private insurance company. And I like to say it's Part C, C for company. That's not what it means, but it helps us
clever.
bring it in a little bit more. So it's administered by a private insurance company, which means that your access to care, your payment when you go and see doctors is going to be a little bit different depending on which company you do it and how they administer their plans.
Gotcha. Okay. I want to one of the big decision points is how they function, how they work. So I want to talk about gaps with that, and then I also I know one of the other differences or decision points is the cost. So both of those are going to feed into you've got these two options. They're both called Medicare. One is A, B, D, and a supplement. The other one's A and B, but really going with Part C. How do you make that choice? So we're going to hit that, and then we're going to talk about open enrollment, changes that you can make, should make, and then upcoming law changes to Medicare. All that and more coming up on the Wise Money Show with Korhorn Financial Group. Hello, YouTube. Thanks for being here. This is the Wise Money Show. What you're watching right now is our weekly 1-hour talk show that airs right here on this channel, 10 a.m. Eastern Time every Saturday morning. Also on podcasts at the same time, but also on a couple local radio stations at the same time, which is why the content's broken up the way that it is, why there's breaks and whatnot. It's a talk show. But we've got all sorts of content that airs all throughout the work week right here on this channel, where we're breaking down various planning techniques, strategies, all from a perspective of looking at all 6 areas of your financial life and how they interact so that you can make a wise decision, wise choices. If that sounds good to you, make sure you hit that subscribe button, turn on notifications so you're made aware every time we drop new content. If you like the content, leave questions as well. We appreciate it. Okay.
Awesome.
Good stuff. All right, we'll pick it up with anything additional with Medicare Advantage, and then we can talk about what are the typical copays, how does it function, and then that'll lead us into, okay, how do you make the choice between the two? So after that choice, we'll get into open enrollment. So my guess is halfway through the segment, we'll get into open enrollment and maybe finish this segment with just explaining the different, this open enrollment and what you can do, and then the other open enrollments.
Yeah.
Is that where you would want to get into discussion about deciding how to change your original decision?
Good. Yeah, good.
Okay.
I think that even though it's something we've hit before, I feel like for those listening for the first time, you got to hit that.
Right.
So, and even if someone's heard us talk about that before, but they were like, I'm not switching. And now they're hearing, thinking, well, I wonder if I should switch. Yeah, we should hit it.
What's the process for that, and how would you decide, that kind of thing? I'm assuming you get that question pretty frequently.
Yeah.
Okay.
All righty. Yeah. It's Medicare open enrollment, and not just that. This is a season where you can make some changes, not a lot, but some changes. But there are some big changes coming up to Medicare in 2025 and 2026. That's what we're helping with right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name's Mike Bernard. With me in the KFG studios, Josh Gregory, and special guest, Medicare expert, health insurance expert, Ben Bulgrien. Every episode of the Wise Money Show is on podcast wherever you listen. Just go check it out. Search the Wise Money Show. Subscribe to it there. You can rate the program there as well. That helps, gives helpful feedback to us, so we appreciate that. Talking about Medicare, and we are starting foundational before we add on some of these changes. And we were just explaining the second choice with Medicare. You can go traditional Medicare, or do people call it traditional Medicare or original Medicare?
I call it original Medicare.
Okay, so that's A, B, D, and a supplement. Or you can go with Medicare Advantage, Medicare Part C. Now, you said C, in a way, stands for company, or that's a good way to remember it. So it's a separate company. But it also is going to operate like your kind of private company insurance that you've had throughout your career. So there's copays. There's what's typically, how does it function?
Yeah. So the way that we would select a Medicare Advantage plan is you'd want to make sure that your doctors are in the plan's network, just like right now. When you were looking for doctors, you had a network that you could operate within, and you select your doctors based on that. We want to make it as doctor focused as we can, because having access to the doctors you've had for the past 20 years, 30 years, however long is going to be is really important for a lot of people. And then when you go to get some type of care, you're going to have potentially a copay. Now, I say potentially because if it's a primary care doctor for your annual checkup, it might be $0.
Okay.
If you go and see a specialist, it might be $40, it might be $80, kind of depending on how the plan has decided they're going to distribute the costs. And there's another part of that. Most of the plans that we write are PPOs, or preferred provider organizations, which have more expansive plan networks. And that means that there's a out-of-network benefit. So if somebody were to go and see a doctor, for some reason we weren't able to find a plan that had their doctor in it, as long as that doctor is willing to bill the insurance company, they can still go to that doctor, but now they're going to pay more. So instead of a $80 copay, you got a $120 copay. Okay. And all these dollars that you're paying for copays, and then when you get services done there and you get some type of treatment, there's going to be a co-insurance or potentially a copay as well. That's all these dollars are going to be applied to your plan's max out of pocket.
So a copay is you paying the first dollars out of pocket, or basically just almost like a fee. Co-insurance is more of a cost sharing between you and the insurance company.
Exactly.
And you get into a lot of this jargon, and hopefully this is familiar terminology because you've been operating in your own health insurance world throughout your entire career and everything. But you want to have these things clear in your mind, because this is a Medicare Advantage feature, right? Different than that original Medicare and a Medicare supplement. There's less of that out-of-pocket type cost, right?
Yep.
Okay.
Most of these plans also have drug coverage built into them.
That's where I was just going to ask. Do you get Part D, or is drug coverage part of it?
The majority of them have Part D built in. Some of them are Medicare Advantage only plans.
Okay.
And that's a potentially good option for somebody that gets their drug coverage through the VA or some other source where they have low to no drug costs. If you didn't have other drug coverage, though, and you just signed up for an MA-only plan, then you could face some penalties down the line. So Medicare really cares about making sure that you have some type of drug coverage in place.
And just for those of you really quick, we were talking about IRMA earlier. Now we're talking about MA.
Yeah.
Now MA is Medicare Advantage.
Yeah.
Okay. I want to talk about cost for just a second. If I were to Medicare Advantage, you're going to pay your Part B premium if you go Medicare Advantage, but the Part C comes at a very low cost or sometimes no cost at all. Is that still true?
Still true. Yep.
And that doesn't mean you're getting it for free. There's really nothing free out there, but the government is subsidizing the cost. And so if you're looking at the Medicare, traditional Medicare, original Medicare, A, B, D, and a supplement, Medicare Advantage is typically approximately half the monthly premium of what traditional Medicare would be.
Yeah.
So cheaper doesn't always mean better, but let's weave into, well, how do you make this decision? How do you make a wise choice here? First of all, it's wildly complicated, so you've got to start the education process early. You've got to have an expert like Ben or someone like the agents on our team that can help explain this to you, and so that you can understand it and then make a choice that feels like the right fit. But how do you know? Like what do you consider when making this decision?
That is an important question, and my observation, and I'd be curious to get your perspective on this, Ben, is a lot of people they just fall into one camp or the other. And a lot of it is based on, well, what was your experience during your working career? What was your health insurance like? Were you on a high deductible plan where you were always paying for stuff out of pocket until you reached that high limit and then, stuff was covered more? Maybe that makes you lean a little bit more towards a Medicare Advantage type of a structure versus, I've had teachers, for example, who throughout their entire working career, they had amazing insurance, like the best you've ever seen. Very little cost to them necessarily, but it's like their insurance paid for everything. Lots of preventative care and stuff like that. And when they would have a procedure done or a surgery or something like that, there was very little cost to them. Kind of a Cadillac, a rich plan, as we would often say. And so if that's what you got used to during your working career, it could maybe kind of put you in a certain lane and you just feel more natural going one way or another. It's like, are you a Ford guy or a Chevy guy? Or Mike, a Ram guy?
Yeah, no, Ram. Yeah.
That's right.
So part of it is, how comprehensive do you want, like the coverage and the cost, all that? I mean, I hear that a lot, that, well, with Medicare Part C, there's more copays and there's more chasing down bills and was this billed correctly? Right. And so a lot of people have a strong opinion about that. And then, and it's almost like, well, you have to weigh your feelings about that with the potential cost differences, right?
Yeah, no, absolutely. And I'll agree with everything you said. My spoiler alert is that I don't think one's better than the other one. And I usually make my clients wait till the end of my presentation to tell them that. So we're getting into it early in this. But I do think it comes down to three main factors, what I say. It's going to be your health, it's going to be your finances, and it's going to be your risk appetite. So how much risk do you want to assume versus how much do you want to transfer to an insurance company?
Yeah.
And the way that we talk about that is, we've got lower guaranteed costs on the Medicare Advantage side in the form of those lower monthly premiums. You're paying this no matter what, versus a higher guaranteed cost in the Medicare supplement. You've got a higher monthly premium that you're paying, whether you go to the doctor once a year for an annual checkup or every month because you've got some type of conditions. You're always paying those. But the potential cost is where we're going to see one of the bigger differences, because now the higher potential costs on the Medicare Advantage may sway you in favor of, well, I know I'm going to pay this higher monthly cost on that Medicare supplement piece. But the risk is, one thing that Medicare Advantage plans have that Medicare supplements typically do not is something called prior authorization. And so if somebody has had in their working career some type of large medical expense, they can know the pain of going to an insurance company saying, hey, I need this procedure done. And the insurance company is saying, well, sorry, you don't meet our standards.
Yeah.
And so try again.
Yeah.
And that's big deal.
It's such a tricky decision to make too, because you're making this at the beginning of retirement usually, right? It's as you're turning age 65, you're picking your lane. Am I going with original Medicare and a supplement, or am I going with this Medicare Advantage option instead? And, at the eve of retirement, you're young, you're healthy, you maybe haven't accumulated very many medical conditions or issues, and so your risk appetite might be high. Your health is still pretty decent. Financially, you may feel okay, and so you say, hey, let's go one direction versus the other, but things can change eventually, right?
Yeah.
I was thinking earlier, you said, and we might have to unpack this in the next segment, but tee up with a question. You said Medicare Advantage is very doctor-driven. Like, is your doctor in the network? I'm thinking about, well, at the eve of retirement, you might be living in one spot. 5 years in, you might be living in a different area, and you don't, unfortunately, get to pack your doctor up and take him with you. So what do you do in those types of situations?
Yeah.
So understanding not just how do you make the decision, but then how do you live with it or adjust it along the way, I think is where we need to go.
And that's the right segue, because both some of that intersects with open enrollment, and then the other intersects with, well, once you make this decision at retirement or getting on Medicare, can you switch, and what's that process like? So we've got that more coming up on the Wise Money Show with Korhorn Financial Group. Okay. When we started, I said, well, two potential paths. We're going the other path. Like, that's good. We're going to be racing to the end. Okay, Ben, you got 1 minute. Tell us everything that's changing. It'll be good. Okay, so we're going to start off with how you make changes, and then that'll weave right into, and I'll take us to open enrollment, but if you naturally go there too, that's fine. And then maybe get into changes this segment. I don't know, or just hit them all in the last. That's fine. So anything that so obviously we're now trying to pick up a pace slightly, but is there anything that we need to make sure we hit that we've missed that we need to circle back to?
The tricky part with the Part D changes, which is very, very, like, it's a big change. But from my understanding, there's been an influx of dollars from the government to offset what the changes are really going to feel like for consumers 2025. And so what we have been telling people all year, hey, this is going to be big. This is going to be big. It might not feel so big this year. But then if we don't have another influx of dollars next year.
So closing the donut hole is going to come at a cost.
Yeah.
And initially that cost is borne by all taxpayers.
Borrowing. Yeah.
Yeah. Okay.
Wow.
Sounds good.
Yeah.
All
right. Well,
you found a way to irritate me. Good job, Ben.
So
Thanks a lot.
one time during the show.
All right. Third segment. Okay. big changes coming up. We were just talking at the break about the donut hole. We're all aware of that. I prefer to eat donut holes, but if you're on Medicare, you're like, you fear these things. And so there's good news and bad news. We're going to explain that change coming up. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Josh Gregory, special guest, health insurance expert, Ben Bulgrien. Every episode of the Wise Money Show, as well as a lot of other content, is on the YouTube channel, the Wise Money YouTube channel. So go to YouTube, search the Wise Money Show, subscribe to it there. Turn on notifications so you're made aware every time we drop new content. That's not just the talk show, but all throughout the work week, we've got lots of other videos, well over 1,000 videos in the library there. So go check that out. All right, getting back on track, we were explaining the two different choices you have, and there's nuances beneath that, but broadly two different choices. When you make a decision to get on, when you make that choice and you get on one path, either original Medicare or Medicare Advantage Part C, can you switch? What's that process like?
Yeah, absolutely. So there are going to be some limitations within the switching back and forth. So let's start with the Medicare supplement. If you join your Medicare supplement policy when you are 65 or you're coming off your employer coverage, you can, on an annual basis, switch your Part D coverage. That's during this open enrollment period that we're in right now, between October 15th and December 7th. You can always switch from your Part D to a different insurance company because your prescriptions can change, the plans themselves can change, so there's some flexibility in that itself. You can also switch to a Medicare Advantage plan during that window. So if you say, yeah, I'm healthy, I've been healthy, I want to see what these Medicare Advantage plans are all about, you can join a Medicare Advantage plan to begin at the start of the next year. If you're already on a Medicare Advantage plan, you can switch to a different Medicare Advantage plan. If you're on a Medicare Advantage plan, you might be able to get a Medicare supplement. You could go back to original Medicare, get a Part D. You might be able to get a Medicare supplement, but there's a couple extra rules for that. If you are within your first year of having it, you have a 1-year trial right. Mm-hmm. So once in your lifetime, if you can join a Medicare Advantage plan, try it out, see if you like it, and then switch to a Medicare supplement at no risk. But if you're on a Medicare Advantage plan and it's been 366 days, then in order to join a Medicare supplement, you would need to pass medical underwriting. And you could do that at any point during the year. We try to line those up with these enrollment periods just to make sure that all the other coverage is in place. But you've got a lot of flexibility in the open enrollment period, but not total flexibility.
And the big idea there is because of the cost difference. If you say at the beginning of retirement, I'm going Medicare Advantage, I'll have my premiums be really low, I'm young and healthy, and then all of a sudden 3 years in or whatever, something changes and you say, oh golly, this is going to be really expensive. I should have gone with Medicare, traditional Medicare, and willingly, happily paid a higher monthly premium because then I wouldn't have so much out of pocket. Let me just switch back. Yeah. And so in that instance, they say, well, no, you got to prove it. And if you've had a health issue, they're going to say, no, you got to stay where you are. Yeah. So, okay.
I had a client once who, not a teacher, but worked in the school system. We were kind of highlighting that profession earlier. And she started out with a Medicare Advantage plan because the smaller premiums were appealing.
Sure.
But she was one who, again, throughout her whole working career, she was used to having a very rich health insurance benefit that paid for everything. And she got cold feet in that first year and chose within the first year to make the switch back or not back. She was never on a traditional Medicare plan, but that's what she decided to switch to. And the only reason that she was able to make that switch was because it was inside of that first 12 months, because health-wise, you know, she had a lot of pre-existing conditions and things, and she wouldn't have gotten through the underwriting process and wouldn't have been accepted in if it had been outside of that 12-month window. So that's an important, you know, get out of jail free card or a mulligan or whatever term you want to use to kind of do a reset for yourself.
Yeah, absolutely.
And you started sharing a little bit of this open enrollment period, but I want to go back to one of the other questions, and it might bring us right into open enrollment again. But okay, I retired in Indiana, and I selected plans that fit for my doctors and the hospitals in the area. But I've since moved to another part of the country.
Yeah.
Even another county, even. But I've since moved. When can you make changes? Do you typically make changes? And when can you make those changes?
Yeah.
So that your new, wherever your home is now, and the doctors that that you're going to start going to are in network for your plans.
Yeah. So we'll start with the good news. Your Medicare supplement will go with you. You don't have to make any changes with that. You want to make sure you update your address with them just so that they can get any plan details to you correctly. The maybe not great news, but it is still good news because it gives you a little bit more flexibility, is that you would qualify for a special enrollment period, which means that when you move, you can switch your Part D plan. You have to switch your Part D plan, and you can switch your Medicare Advantage plan. You have to switch your Medicare Advantage plan. So it's kind of a pain because now you have to pick a new one mid-year, but it does give you the flexibility to make sure that the doctors are in your plans network for your new location, or if there's a new pharmacy that's closer to you that has better costs for you, you can switch to your Part D plan to facilitate that change as well.
And how much time do you have after that move? You said you have kind of your own personal window of time, but I'm just picturing someone moving from one state to another, and man, it can be an ordeal to pick a new doctor. And even if you get into their schedule, you don't know if you like that person, or
Right.
How far out will it be before they can even see you for the very first time, that sort of thing. How much time do you have to then align the insurance decisions with your new move here?
Yeah, great question. It's typically 60 days. So you've got a little bit of time when you get there to settle down, get your things unpacked. But you do want to jump on it because you want to make sure that you're within that window.
So that's a good planning issue there. If you're thinking about a major move in retirement, getting some of those ducks in a row before you actually change addresses and physically change location, find your doctor maybe before you've even relocated, and be thinking about this Medicare change for you. That's good.
I don't want to belabor this. I know we need to get into some of the big changes coming, but Medicare supplements are priced based on the county where you live, right? And so if you move, you said good news, your supplement will move with you. Will the price stay the same for the rest of the year, or could the price change immediately as soon as you update your address?
So the prices ultimately can change kind of whenever they want them to change.
Oh, no, really?
So typically it does look bad on the insurance companies to increase their prices more than once a year. And some insurance companies handle it differently. For if you move out of state, then you still get in-state rates, those kinds of things. So it really is based on the insurance company and what their rate increases are.
Got it. Okay. All right. So rest of the time, because I know there's a lot of changes, within the Inflation Reduction Act, which quite possibly is the worst name of any law, because it really had nothing to do with inflation. It just sounded good. But believe it or not, they had a lot of Medicare changes within it. And so, Ben, you got free reign here. We've got a little bit of time to get started, but what were some of those changes? What do people need to be aware of, and when, and how will that impact them?
So the big change that I talk with the majority of our clients about is the change in your costs for your Part D prescriptions. So when you go and fill your prescriptions at the pharmacy, how much are you going to pay? As of 2023, there was no limit to that. It was an uncapped number. So if somebody had high costs, they could be paying $15,000 a year, $20,000 a year to get the prescriptions that they need to live. In 2024, they've introduced a cap as part of the Inflation Reduction Act, and that's going to be still a decently high number, $8,000, but that wouldn't be what you would pay out of your own pocket. It would be you and the insurance company. So it's $4,000, maybe a little bit less than that. And in 2025, they've lowered that number to $2,000 total.
Still between you and the insurance company?
Just you. So now it's shifted fully onto your responsibility, $2,000 flat, which is great for a lot of people because now $15,000, $20,000, $2,000 is potentially life-changing.
Yeah. I'm thinking of some folks that I mean, this is a common thing where they get further into retirement and they need a medication that is just very expensive, and it is very challenging with cash flow and so on. So that's a big benefit to them. However, there's trade-offs to that too, and so we'll get into that. So we've got more coming up here on the Wise Money Show with Korhorn Financial Group. All right. Yeah, I'm thinking of these folks who, I think it's a monthly dosage of something. It was $1,500.
Yeah.
Yikes. In retirement. On a fixed income.
Yeah, and now I'm wondering if this would impact. Probably would.
So that's something they're taking at home?
No.
Or is that they have to go into the doctor's office?
They have to go in the doctor's office. So it's still probably, this in particular one wouldn't.
And what are they on? Sorry, if you said this, are they on a supplement or are they on Advantage?
They are supplement.
And it's still costing them $1,500?
I believe so. Yeah.
That's surprising to me because occasionally, if something can be administered or if it has to be administered at a doctor's office, it's billed through Part B instead.
Mm.
And then if it's billed through Part B, then your supplement would pick up the rest.
So it must be more to the story that
Yeah.
I'm going to lean into it next time I see him.
Yeah.
Interesting. And that $2,000 cap is an annual number?
Annual number. Yep.
Okay. Wow.
Okay. So 4-segment, land and plane. I don't know how, and you don't know how long it'll take to get through everything, but I'm assuming just changes this entire segment, or do we need to tee up questions as well?
No, I think because we can talk about the impact of that on, we anticipate larger increases for Medicare supplements over time because of this change. We anticipate lesser benefits on Medicare Advantage plans because of this change. We anticipate changes in employer plans because of this change.
Okay. Is there another change other than the donut hole and drug coverage stuff that you want to hit? Like, is there more stuff?
I think so the drug negotiations, they play into this. The low-income subsidy is something that we could talk briefly about. That's just, to me, that's more of a make sure you talk with somebody specifically to see if you would qualify.
Yeah. Okay. All right. Let's get into it. 4-segment. All right. Here we go. Thanks for being here. This is the Wise Money Show with Korhorn Financial Group. My name is Mike Bernard. With me in the KFG studios, Josh Gregory, and special guest health insurance expert Ben Bulgrien. Stay up to date on all Wise Money content. Find us online, wisemoneyshow.com. It's where you can reach out to us if you have any questions or learn more about the show and the firm. Or you can find us online, find us on social media, wherever you're at. We are there as well. Search the Wise Money Show. Ben has been helping us understand the different choices that you need to make within Medicare. The big choice, traditional Medicare or original Medicare, that's Part A, B, D, and a supplement, versus going with Medicare Advantage, which is, A and B, but then Part C. Very different cost structure, very different experience. You've got to make a wise choice for you. Either way, though, they're both experiencing some changes going on, and you started those changes, and now we need to talk a little bit more of the implications. So big changes for 2025 is it the donut hole that's changing? Yep. So explain this again. Yeah,
so as of this year, there's still something called the donut hole in prescription drug coverage, and that's after you have hit a certain threshold within the plan, your cost share would change to paying 25% of whatever the cost of your prescription is. It's been a part of Medicare Part D, both on original Medicare and the Medicare Advantage plan for a long time, and next year it's being eliminated. No more 25%. We're getting capped at that $2,000, and we anticipate that having some pretty dramatic effects because, while last year the insurance company wasn't covering all of the costs, they're still not in 2025, but they're covering more of the costs. Mm-hmm. And I don't know about either of you, but I've never met an insurance company that likes to lose money.
Yeah, right.
And so what we're anticipating happening is some of that cost being offset to the Part D in the form of a higher monthly premium, potentially a different formulary, so a more focused formulary, we'll call it. So you may pay more for prescriptions than you had in the past. You have up until that limit, right? So higher premiums potentially. Applies to the Medicare Advantage side as well, but because those are bundled plans, we anticipate those having a smaller impact because they can offset some of those higher costs on the prescription side to the medical side, which allow them to keep their premiums at or near $0. Again, something that we are projecting out.
Yeah.
If people are starting to see, well, my Part D premium is increasing, and those $0 look even more appealing than they did in the past, and they decide to give those Medicare Advantage plans a try, well, that means that there are going to be fewer people paying their Medicare supplement premiums, which means there's going to be a smaller group of people that are paying to insure the entire group of people.
Mm-hmm. Okay, so just to recap here, you're saying that the Inflation Reduction Act could cause premium prices to go up? And what you like you there's no,
wait a second. I don't think this is working.
Okay, no, all kidding aside, the big benefit if you have high prescriptions and have been, I mean, just we've seen how challenging this can be on cash flow. Big improvement there. However, there is no free money. Sure. Those things just get offset somewhere else, and you're saying we're anticipating there might not be a big change in 2025.
Right.
Is that right? Like the government is actually helping to front the bill, which means taxpayers basically they're going to spread the cost to all taxpayers by borrowing more.
Yeah.
But starting in 2026, that probably won't happen.
Yeah, we were anticipating it happening in 2025 until this happened. And so this happened this summer, and we said, well, okay, so that's going to have an impact on this year. But if it doesn't happen again next year, or it doesn't happen the year after that, and the year after that, so it is evolving.
So, and what that could mean, getting back to this choice of Medicare, traditional Medicare or Advantage, the distance between the cost of what it costs to be on traditional Medicare versus Advantage, that distance could widen.
It could widen.
And more people will look and say, well, geez, I'd prefer Medicare, original Medicare, but if it's now a third as opposed to a half, if it's now a third of the cost to stay on or to go to Medicare Advantage, then I'll go that direction. And that could drive prices up even more.
Right.
Yeah.
And all of this is happening on the heels of food costs have gone up, your utilities have gone up, your car insurance has gone up. And that is painful for someone who's on a fixed income or they're in retirement. They don't have the ability to just go work more and increase their income necessarily. And man, as you were talking, it just got me thinking about anyone who's in their 30s, 40s, 50s right now. Like, you have to be planning ahead for your retirement because these expenses, they're not going away. In fact, it's something that you're going to have to monitor even more as you get into retirement. And at a time when you don't have a lot of flexibility in your cash flow, maybe, government action could start driving costs higher when their intention, theoretically, was to help reduce costs. So, man, you got to be planning. You've got to be focusing on putting yourself in a position for retirement where you've got a nest egg that can keep up with these types of rising costs. And I know we don't have time to be on a soapbox like that, but we're talking to folks in retirement, but I want to make sure that we don't lose sight of the fact that if you're not yet to retirement, the decisions you're making today, the preparation you're making today is going to put you in a position to hopefully be able to weather these types of storms better.
Most people, as they're planning for retirement throughout their career, underestimate and underplan for the health insurance piece and Medicare.
Yeah.
Ben, what are some other changes potentially or more things that people need to have on their radar screen with Medicare kind of moving forward?
So something to keep in mind, it is, again, related to this change in your Part D coverage and the limits that are placed on what your responsibility would be. If you are working beyond age 65 and you've got a creditable drug plan through your employer, now it's going to be harder for those plans to qualify because they need to pay at least as much as what Medicare would. And so with these new benefits that are coming into these Part D plans, you would want to make sure that your creditable coverage hasn't changed. And from what I'm hearing, 2025 is kind of an exempt year. 2026 is when we're going to want to say, well, we want to make sure that you've got the proper coverage in place so you can avoid penalties. And another piece with that is Well, if you're continuing to work, but you don't have a creditable drug plan, and you want to join Medicare, you can join Part A for no additional premium, but then you lose the ability to contribute to your HSA. Right. So it's another 6 months in advance that we need to start planning to avoid any penalties or fees.
Yeah. So further emphasizing, if you're planning on working past age 65, fantastic. We need your expertise in the workforce, and yet at the same time, financial planning issue. That's where you've got to you need to make sure you're taking a comprehensive approach to your finances so that you're aware of, HSA contributions and the potential look back there, but also potential Part D penalties, right? Okay.
I'm hearing you say loud and clear that these can't be last minute decisions that you make as you get to retirement either, right? A week before you're scheduled to retire, that's not the time to realize, oh yeah, I need to figure out my health insurance. How far in advance do you like to be speaking with someone who's coming up on retirement so that they can be making these types of decisions and keep maximum flexibility in place for themselves?
My favorite time to talk to people is when they are very curious. They've got questions about it, and that can be as early as a year in advance or 2 years in advance. We can't do anything at that point, but to help demystify what we're talking about. If you're coming off of retirement, if you're getting ready to retire, the earliest that we can really do something is 2 months beforehand, though. So we like to talk just to make sure that you've got a plan in place so you can take action at that 2 month period. But I want to make sure people feel comfortable, that they feel equipped to make those decisions when the times come.
And in order to have a plan in place, you have to have your team in place as well. So don't wait until the last second to get your certified financial planner working with you on a retirement projection. That certified financial planner hopefully has someone like a Ben Bulgrien, a health insurance expert on their team to help build your network of professionals that you're going to lean on for advice, not just at the edge of retirement, but as you get into retirement, because we've barely scratched the surface today on all the changes that are happening with Medicare. And who knows what they're going to be the following year. We're talking about 2025 right now, but they're going to keep rolling out with new changes, potentially new challenges, or maybe even new opportunities. How are you going to have the right people in place and the right plans so that you make the best possible decisions with your health insurance in retirement?
Yeah, our team, obviously, the show, the Wise Money Show, is to help equip you and help you take a comprehensive approach to your finances. Our team, of course, Ben, we're here to help, especially during this open enrollment, so that you can make a wise choice with your health insurance. Ben, thanks for being on the show. Appreciate it. On behalf of Ben Bulgrien, Josh Gregory, all of us at Korhorn Financial Group, have a great weekend. We'll see you next Saturday for the Wise Money Show with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.